Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, August 12, 2015. What a day out there today it was. So we had a big sell early in the morning, and the sentiment was extremely bearish out there. If you listen to the media, CNBC, all that nonsense, it was all about China. It's always somebody else's fault. You ever notice that, by the way? Whenever our market goes down, it's either Greece or Europe or China or something else. It's never us. Isn't that interesting? Does anybody notice that happens? It's never our fault or our problem. It's always somewhere else in the world that's causing our market to sell off. I just find that fascinating. All right, nevertheless. So, in short, basically we had a reversal day. So let's talk a little bit about what happened. So we sold hard early, and if you listen to the pundits or the talking heads on TV, you know, they basically ran out of things to sell, and that's why the market bounced up. Nobody ran out of anything to sell. People have plenty of stuff that they didn't sell. But nevertheless, what happened was we had a reversal. So let's just look at the hourly chart real quick, and we'll get into what the scoop is. Okay, so we came down here to about the 205. What was the low today? 205.36, and then put in a low and then started higher. And if you're watching the market, you know, you look for tells as an intraday trader. If you're an intraday trader, you look for tells. One of the tells today was Apple. Apple was down early at 109.63 at the low, and Apple basically started to bounce before the market bounced, and that was tell number one. Then what happens is when you look at an hourly chart, once we closed this candle here above the high of the opening candle of the day, which was the big red candle here, once we closed back above that high and we got back inside this triangle pattern that I'm going to bring up on the daily chart and again in a second, the purple line here and the purple line here. Once we closed the hour above that level, that was the second tell that we were going to get a short squeeze, and that's exactly what happened. So let's go back to the daily chart for a second, and let's talk about it. So the likely scenario going forward is this. Obviously, anything goes, but if you remember last night when I told you that, and the whole premise last night was, you know, the life vest scenario, you have to wear a life vest. These waters are choppy. You're going to get big swings to the downside and big swings to the upside, and they come out of nowhere. That's exactly what happened today. All of a sudden, around 11 o'clock or whatever time it was, the market starts to rally, and we get a short squeeze or a rally for the rest of the day. And nobody really knows why. And the reality is that we basically hit what I'll call daily chart support down here below 206. I had it at 206.53. Oh, by the way, you'll notice that some of the numbers have been adjusted on all the charts for two reasons. In particular, this chart. Some of them are the same. Some of them have been adjusted. And there's two reasons why. Because I lost my charts this morning when I sat down in front of the computer and I started messing around with my screens. All of a sudden it went haywire, and you don't need to know the rest, but you can just imagine what happened from there. So I had to kind of rebuild everything, and the second reason is I just fine-tuned a couple of the numbers on some of the charts and took some of the stuff off that we don't need any longer. So now let's talk about this triangle pattern, right? So here we go. So this is the way we're going to play this going forward. It's actually, let me get rid of this. It actually works in our favor, the fact that this triangle exists. So from this reversal today, and this is a good reversal, okay? By the way, we got back above the 208.40. We got back above the 2078 in the E-mini contract. I mean, they just recaptured all the important levels, and that tells you that the market's just not ready yet, okay? There's still bulls out there. They're still buying the bottoms. They're still buying the dips, and that's fine. We're going to get big swings in both directions. You can wake up tomorrow to be down 30 points in the S&P. It's absolutely possible. From day to day right now, it's a lot more difficult to trade these ranges like I've been saying, or trade this range like I've been saying, because the people get a easy trigger finger or a quick trigger finger when markets are in these tight ranges. So this is definitely a reversal day on volume, and that's what's important. Today we had 170 million shares, 169 million shares against a 90-day average of 114 million shares, and that's certainly more volume than we've seen all the way back to July, okay, middle of July or towards the end of July. So that's important. And on an up day when we hit a bottom or we hit a low and we had a reversal day, that's important. And the fact that we recaptured the 208.40 and the 2078 in the E-mini is also important. Now, we broke through the bottom end of this triangle and then recaptured it today. That's also important. So what's the likely scenario? The likely scenario is that we have probably more of a quiet day tomorrow, I would suggest, but I think there's more upside coming, whether it's tomorrow or the following day or somewhere over the next few days. There should be more upside coming. We should get back up to the top of this triangle, and I think we can actually bust out through the top of this triangle just like we busted out through the bottom today. And believe it or not, the reason this red line is still on the chart is because the number, as I've been telling you, is still valid. As crazy as that sounds, as the market was all the way down here, okay, that number still stuck on the calculator, which meant to me that something was just not ready yet, or it just was either going to come down later, or I don't know. I can't even tell you why it was still there, other than the fact that I don't question it. It was just still there, and that's why I left it here, and that's why I'm still suggesting that we could see more upside in this market. Whether we get to 212 or not remains to be seen, but the important thing is that we should see or could see more upside momentum. Could we see a breakdown right away tomorrow? Could this be a bull trap? Absolutely. What's a bull trap? Is when they just suck everybody into the market, people cover their shorts, and then all of a sudden the following day or shortly thereafter, they just take them right back down. And that's possible. That happened right here. It was a bear trap, or bull trap, excuse me. It happened right here. We went up, and then what happened? We gapped down the next day, and then today we gapped down again. In fact, we were down pretty hard overnight. I think the market started to sell off, if I remember correctly, about 9:15, 9:20 p.m. last night, and it just started selling pretty hard. The market was up, and then all of a sudden you kind of look over, and the market, the S&P's down 12, 15 points after being up. I forget what it was, but it was up. It wasn't negative. So it was a pretty hard sell out of nowhere. And that was as a result of the Asian markets, I guess, China, this, that, and the other thing. It doesn't really matter. So that's what's going on in the S&P. So that's pretty much the story. We're watching day by day. Be ready for more big swings. This isn't over. The downside's not over. The upside's not over. We're still going to see choppy behavior. You're going to see swings that take the market up like this and swings that take the market down like this. I can't say it enough. I basically have been, pounding the table over the last few days, kind of saying, be careful out there, big swings, all this stuff. And this is evidence today of what exactly I was talking about. So be careful. And if you're not comfortable trading in these environments and being long or short anything in these environments, then don't. Just wait for the smoke to clear. Wait for the kind of the all clear signal that we've got one direction or another. And then you can hop on board. But right now in this choppy market, if you're not comfortable, then don't do it. It could be very scary out there. So let's just take a look at a couple other things real quick before we move on to the other markets. The IWM. Okay, the IWM, same routine. Although this market still remains much weaker over the longer term on the daily chart than the Dow or the S&P. So the Russell's still weak, but you put in, a good bottom. I don't know that I would call this the same type of bottom. In fact, let me show you, interestingly enough, look, this is a bottoming tail. Okay, this is the E-mini contract, and because I've got it on the 24-hour chart, that's why you see this bottoming tail here. There's no gaps on the chart that I'm showing you now. This is a bottoming tail, and where'd you come in? 2048.50, pierced right through it. This has been on the chart for a while, I'm sure. And then you bounced right off of it. and went on from there. So recapture the 2078. And in my work, that's important, whether or not we stay above there tomorrow. But if we do, that will be further evidence that there's probably more upside to come. If we just trade right back down tomorrow, then this would have been a bull trap. And there's no way to tell until tomorrow. But what's also interesting is, let me just show you one more thing before we move on. I'm going to show you the 10-minute chart. And the reason I want to show you this is because what's important in markets is not how they open them. It's not always how they trade them, although today was important how they traded them, but it's how they close them. And when they close them strong like this, with a rally into the end of the day, forget about these two little red candles here, last 20 minutes of the day, 10 minutes of the day, and then this is the final candle of the day. Forget about that, but this is strong into the last hour or so of the day. That's important. That's telling you that A, there was short covering, and B, there was buyers. And the fact that you had volume today told you that there were buyers down here, okay? This is not an accident. It's not a fluke. This is not mom and pop, you and me buying the market down here. This is institutions stepping up to the plate because they like the level. They know they know it should hold for a while. And that's my belief anyway. So I'm going with that, and that's the way that I've been trained, and that's the way that I'm teaching you. So whether or not we fail tomorrow or not remains to be seen, but as evidence of today, we should not fail tomorrow. We'll see what happens. Okay, let's go to the transports real quick. So the transports, here you had a pierce through the downsloping trend line, and then you recovered just like the rest of the markets. The transports were down very, very hard today. They were down something like 190 some odd points, maybe more. It was about 190 points last I looked, and the transports finished down 40 points. That's some recovery. That's very, very strong behavior. That's not an accident. Those things don't happen by accident, okay? You don't have a 150-point swing in the transports by accident. Remember what I was telling you, that as long as this stays intact, okay, up move, sideways, as long as you stay really on a closing basis above this trend line, I would have liked to see the market remain above this low here on a closing basis. That didn't happen the other day, but we did recapture it. And so I'm going to still suggest that while the market, I'm going to redraw the line. While this market isn't necessarily the best pattern in the world, this is still a bullish pattern as long as you stay above this downsloping trend line, and this did hold today. So we'll see. The next couple of days are very important for these markets. Let's go over to gold. So gold's doing, let me get rid of this. Gold's doing pretty much what we suggested all the way from back down here. We started catching a bid, and gold got above the 1105, then it captured the 1112, then it got above the 1112, and now we're making a run for 1144, 1145, something like that. This downsloping 20-period moving average, or I'm sorry, the 50 is the blue line. This will become resistance depending upon where that is at the time. But my calculator came out with 1144. So you give it a few point leeway wherever it winds up. Maybe it goes all the way to 1150. That's certainly possible. When markets are spiking up or spiking down, they tend to overshoot the levels. But sometimes they come right on the money. You've seen that happen many times before. So basically this is doing everything that we suggested. We only closed below the 1089 one time. And if you remember back in this day here, what day was that? That was August 5th. And then the 6th, I was telling you that this is suspicious. Don't trust the downside. I gave you the downside target, which was 1068 to 1065. But once we started failing to react on the downside, I said that this market has a bid under it and we're probably going higher. Who remembers that? Raise your hand. Yes, I know. So we've got probably more likely than not higher prices coming, but you're gonna get to a point where the market's gonna have to pull back and consolidate for a while. So what you can expect to see is, let me see if I can pull this over a little bit. What you can expect to see is something like this. Okay, wherever this market decides to pull back. Let me just, give me a second here. Okay. Wherever this market decides to pull back, you're going to see something develop that looks like this. Okay, you've seen me do this before. You're going to see a, maybe 3 to 5 days of downward move like this. And I wouldn't be surprised if we came back to test the $1,112 area. And then what you would have is you would have a bullish pattern that looks like this. And then the market would make another up move like that. Okay, you've seen me do that hundreds of times. There's no reason that shouldn't work. So what we're going to do is we're going to use $1,112 as a line in the sand. So what I'm going to do now is I'm going to actually change this, and I'm going to make it a different color so that it stands out. And I'm going to leave in, we'll leave it a red line. I'll just make it heavier. We're going to leave in the $1,089 also, just in case the market fails for some reason, but I don't think that's the case, because remember, I was telling you that August was what should have been and what looks to be a bottom, and that's always plus or minus a month. And this was the 27th, I believe, or 24th of July that we hit $1,072. Therefore, so far, this looks like the low for a while. It's not going to be the ultimate low, but it could be a low for a few months. And there'll be higher prices that I'll have for you over and above 1144, but I have to see how the market does this number. So for example, let's say we rushed right up to $1,144 tomorrow and failed. That's a different scenario than if we went sideways for a week or so and then went higher, or maybe another up day and then went sideways for a few days. Ideally, what you'd really like to see is this. You'd like to see another up day, okay, and then you'd like to see sideways underneath the 1144, because what that would do is the more you went sideways underneath the 1144, the weaker the 1144 would become, and the more likelihood that you would go through the 1144 on the upside. And I can't tell you that now, but if the market started to act in that type of behavior, I would certainly discuss it then. All right, let's move on to another market. And, by the way, let's talk about GDX for a second, because we talked about GDX down here, and I told you where the resistance point would be, and I said that you'd have good resistance here, and the market did stall there for a while. Then it busted right through there, and then I said we'd get up to the 50 period and probably up into the $17 area, give or take, maybe even $17.50. So that's kind of where we're headed, along with gold. And anybody that took this long here from around $14.50 roughly, give or take, maybe $15, should be in good shape. There's more upside coming as long as the price of gold remains on the up move. Okay, oil. Oil was back and forth and really didn't do much today. But what I will tell you is that oil, and I took some of the stuff off the oil chart when the charts disappeared on me. I just keep the $46 in there for now. It's not really that important as it was before, but nevertheless, what I'm going to tell you is there is an important number, and I'm going to put it on the chart, and then we're not going to be able to see it because it's lower. And but we'll see it when we get there, if we get there. It's what it is. Let me just go to my notes for a second, as I worked out the calculation. 40, I'm going to call it. It's really 40. It's anywhere between 41.50 and 42. I'm just going to say 41.75. And when I run the calculations, I run them a couple of different ways, and I came out with a couple of different numbers. So therefore, I'll just split it down the middle. And it's not really that important because I'm not telling you to trade down to that number. And as we get lower, what you hear all the pundits and the talking heads discuss, 30 some odd dollar oil. And I told you the market's going to go down into the 30s, but not now. Okay, so that's not going to happen yet. So what's going to happen is, did I put that at 40 or 30? And I don't remember. I'll check it out later. No worries. It doesn't matter. It's 41.75 is what I should have put it at. So what happens is, if we get, it's an F. If we get down, if we bust through 42 at any point like this week, for example, okay, let's say late in the week. All right, I'll make it up and say Thursday or Friday. All right, if we get down to 42 and kind of crack 42 and start to trade beneath 42 in that zone, okay, then I'm going to start to suggest, and you'll hear all the bears come out of the woodwork, the ones that haven't come out yet, and start telling you $35 oil and all that stuff. And that's at the point in which it's not very often I will say, but I will say it if it happens like this. And it's a big if with a capital I, capital F. If the market gets down to that level later this week, okay, and the sentiment gets all like completely bearish, more so than it even is now, then I would say that you can probably take a crack at a long play in oil, but don't use options. Well, you can use options, you know your risk, but just don't allocate a lot of money to it, and don't play futures, because you can really lose a lot of money fast if you're not a futures player. If you're an experienced futures trader, that's up to you. But if you're not, then don't do that, because you can really lose a lot of money fast and you get whipped around. You can use options in the USO. You can buy USO. It's not my favorite vehicle. You can buy some of the doubles if you want. Whatever you want to do. You can even buy some of the oil stocks. And what I'll probably put out some trade alerts if we get to that level and the market's acting okay, meaning the stock market by that time. You can buy some of the integrated oil plays and some of the other stuff. I'll start to put together a list, because if we get down to that level, it's a big if, but there's a lot of things that have to happen. It has to be this week, and we have to get down to that level. The sentiment has to be way swinging way over to the bearish side, and that's subjective to measure. I can measure it, but you know, I'll know it when I see it. I'm waiting for more people to come and call for $35 oil. I want Dennis Gartman on TV saying $35 oil is coming, and that's at the point in which I'll go long. That's basically the bottom line. So I'll keep you in the loop. We'll talk more about it later this week. Okay, let's go to the bond market. And guess what? We hit the number, 160 today. And I put another number on there, 162. I don't remember whether this was on there before or not. It may have been. I can't recall. But there's still, you know, more upside coming, but not now. Now the bond market's probably going to pull back if and when the stock market, you know, has stages somewhat of a rally, if it has some follow through on the upside. Sorry about that. What I want to do is I want to show you what happens here. This is a pretty good topping tail on volume, you know, so you have a spike up high in the morning, up through the 160 area, and then you have a reversal day, and you finish near the lows in the bottom 25% of the candle on volume. That's a bona fide reversal day. So what we're going to look for is we're going to look for more downside follow through, and then this will still be considered. And I'm not suggesting that we only get to this area. We'll see. But what I am suggesting is that this is still a bullish pattern developing, right? We could pull back down here, who knows, 155, 156, something like that, and then move higher. We'll have to see. We'll play it by ear. I don't have a calculated number on the downside in the bonds right now. If we want to look at TLT, and what's interesting is it's easier for me to calculate the actual 30-year Treasury bond than it is the TLT, because this is an ETF, and the way they build these ETFs, they use derivatives, and sometimes they don't trade exactly the same as the actual bond market. So this number, 126.50 that I had in here, which I thought was a good number in concert with the 160, that didn't work. It was a little bit short of that number. So that happens, but the real number, if I show you two charts, if I show you the actual futures chart like the bond market, and then I show you an ETF, always take the number from the actual bond market, or the futures market that I show you as the gospel number, not the ETF. If I only show you the ETF, that's all I have. But this number didn't get hit, so that was a little disappointing that I missed that target, but I got it on the bond market. And then, so this is the same routine. This is still, there's higher prices coming in bonds. I mean, until I tell you otherwise, higher prices are coming in bonds. I mean, if we see a breakdown in the bond market, and I'll know it if I see it, then I'll change my mind. But other than that, I'm just going to expect another pullback, and we keep seeing pullbacks. And I talk about this all the time, but for the new members out there, you know, we see stuff like this. It's an A, B, C. Markets move in waves. They move in waves of, you know, 3 waves, 5 waves. So here's a zigzag pattern, A, B, C. Here's another A, B, C. Here's another A, B, C. And now maybe this is, you know, A, B, and then we'll see. We'll see. We'll see. And what I said last night, this is a channel. You have higher lows and higher highs, and the market's trading in an upward channel. So there's nothing wrong if the market comes down to the bottom side of the channel and then goes higher. And then when it hits the top side of the channel, it comes down to the bottom, and then it goes higher. And that's just the way it works. That's the way channels work. So there's nothing wrong with the bond market. I think there's higher prices coming. Bottom line. Okay. Here's a special. Here's the dollar. Okay, I thought we would go higher, but what happened was I was wrong, and that happens, right, with markets. Sometimes we're wrong. We're never right 100% of the time. And we went lower today. And guess what? What did we do? And I was happy to see that. Why? Because we didn't have a trade in the dollar on or anything like that. I was just telling you what I saw in terms of the pattern developing. But we had a breakdown, and we broke down finally into the 96.15 that I've been crying for days and days and days or weeks. Okay, weeks. I've been crying for the 96.15 to hit. I've been telling you it's unresolved. We were supposed to hit it here. We should have hit it here. I wanted to hit it here, and we didn't hit it here. And then we started higher, and we finally hit it today. So we may have another day or so of more downward pressure in the dollar, and maybe we even get to the 200-period moving average. I don't know, but what I do know is one thing, that over the next day or so, by the end of this week, we should see a reversal in the dollar. But what I can't tell you is whether we will go down again tomorrow and then reverse, or actually begin up tomorrow instead, or maybe we go down tomorrow and then reverse the following day on Friday. I can't tell you that, but what I can tell you is there's a reversal coming in the dollar because I have a short-term cycle low due tomorrow. So you know the way that works, and for the new members, the way that works is we can trade into a cycle bottom or top, or we can, or that top or bottom could come in on time, meaning it's plus or minus 1 day. So we could have traded into it today and then reverse tomorrow, or we can trade into it tomorrow and reverse tomorrow or the next day. So there's a window of time. And I know that sounds like I'm hedging my bet, like, oh, the market's going to reverse one of the next 3 days. Well, no, that's not what I'm saying. What I'm saying is it didn't reverse today, so it's not the minus 1 day. Okay, and I've told you for the first time today that it's a cycle bottom. So it's either tomorrow or the following day you're going to look for reversal in the dollar, and that should be good for several days of upside momentum in the dollar. So there you have it. Let's go to natural gas. So we were saying when we got to this bottom and we started to put in a bullish pattern here, if you remember, I was doing this. Okay, we put in this bottom, and then we recaptured the channel, right, inside the channel, and I said this is a bullish pattern developing. We're probably going to move to the top end of the channel, and here we go, top end of the channel coming. Let's see what I have. Do I have any? Yeah, you know what? I have another cycle. I have a cycle top coming in natural gas, a short-term cycle. So these are good for, a few days, 2 to 4 or 5 days is what the short-term cycles mean. So again, you're going to look for a reversal, whether we get to the top of the channel or not. We're going to look for a reversal in natural gas, maybe tomorrow or the next day. Same thing. It's really tomorrow, so it's plus or minus 1 day. So forget today because we already went up today. So we could go up tomorrow, we could go up and reverse tomorrow, or we can go up tomorrow and reverse Friday. So that's a little bit of a hedge, but nevertheless, I'm suggesting that after that happens, we should get several days of downward pressure back towards the other side of the channel. That's just the way it works. I mean, look at the way this has been working. This channel has been like this, right? Not always to the top or bottom, but nevertheless, we're inside of this channel. So now we're towards the top, and since it coincides with a daily top on a short-term cycle, I'm actually, this is one of the few times that I may consider myself taking a short trade in natural gas using the top of the channel. If we get up to the top of the channel tomorrow, I will take that trade with a very tight stop. But if we don't, then I probably won't. So I'm very disciplined with natural gas. I don't like to trade it. I certainly am happy to talk about it. It's not my favorite market to trade. It's just too whippy for me to trade. But there are conditions that will get me into that market, and this may be one of them. If we get to the top of the channel tomorrow, coinciding with a daily cycle top, then I would take that trade with a tight stop. Yeah, I would do that. Okay, so we're going to wrap it there today. Hopefully it's helpful. Any questions, feel free to email me. I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.